likely coronavirus pandemic now. Disruption to everyday life may be severe.
Current global circumstances suggest it's likely that this virus will cause a pandemic. It's not so much a question of if this will happen anymore, but
what's up? What's wrong?
The coronavirus is here.
but rather more a question of exactly when.
It's the third biggest single day drop of the Dow in the last 124 years. The end is near. So it's the third largest single day drop in the last 124 years of the stock market. I'm concerned. Prepare for the end.
Okay, so Todd is right. The stock market is down in a 2-day total more than it's ever been in the history of the stock exchange.
It's crazy. So what are investors supposed to do?
Okay, so the market's down and it's down big, and they're saying it's down because of the coronavirus.
Fear of the coronavirus is already ravaging Wall Street. On Monday, the Dow tumbled more than 1,000 points, which was its third worst point drop in history, effectively erasing all gains for 2020.
But we always know there's more than one reason the market is down or up.
More than meets the eye.
They like to pin it on one thing, and right now it's the coronavirus.
Lots of noise. The media's all over this.
So we're going to focus in on the coronavirus and just take a quick history lesson on virus scares on Wall Street, how it affected the market.
It's happened before and it'll happen again.
Okay, so we'll flash this up on the board, but we have 12 different virus type scares over the recent history that we can kind of take a look at and get a gauge on. In recent history, on virus type stock market scares,
Epidemics.
the stock market 12 months later was up 10 out of the 12 times.
So what you're saying, Mike, is that the market crashes and then it comes back up?
Well, 10 out of 12 times, that's what's happened on
All right,
virus
so
scares.
I should not be preparing for the end of times.
No, in fact, let's take a deeper dive on this. Okay, so here's a really great chart for us to take a deep dive into these virus threats that have hit Wall Street over the last 30 years. You can see, starting with the HIV scare in the early 90s, to the pneumonic plague, to SARS, to the swine flu. You can see Ebola. We had 2 Ebola scares. And now here where we're at with the coronavirus. And I really think this chart does a good job of putting into perspective how these different outbreaks have affected the market over the last several decades, but also how many we've had to go through.
All right, so takeaway number 1 for investors is when Wall Street is on sale, you buy what you love. And how do you do that? Do you wait till it goes down to the bottom, or do you buy as it's going down and when it's going back up? What's your take as a trader?
Well, think about it. Think of it like your favorite store has a 50% off sale. Ooh. You've been watching those jeans. You've been watching that MacBook Pro, and all of a sudden Apple computer comes out with a 25% off sale.
Buy. Your Chipotle bowl goes from $8 to $7.50. Buy the things that you love when they're on sale. Wall Street's on sale. It's a great opportunity to buy more of what you love.
When something goes on sale, most people get excited about it. Most people run out and say, okay, this is a perfect time for me to buy.
Right.
But on Wall Street,
it's the opposite. It's like when things are going down, people sell. And when things are going up, they buy more. It's like this very interesting paradox.
It's the fear and greed thing. So as a trader, when the market goes up, you're up against greed. You want to buy more and more and more. When the market's tanking,
it's based on fear.
Yeah, and it's scary.
And you want to just sell before it gets too low.
Yeah, you watch your account going down every day, and you're going to get scared. You're going to want to sell.
But that's the time to buy.
That's the time to buy. And it's the time to look at your long-term plan.
So when there's a pandemic or an epidemic or some kind of market crash, it's not the time to bail. It's the time to press in and stay the course. You've got a 30-year horizon that you're working with. So What's a couple of weeks in the stock market where it's tanking? You just stay the course.
So that was takeaway number 2. Takeaway number 3 is you have to figure out some way to ignore this noise.
There's a lot of noise.
If you sit there and give it energy, you give it your attention, it's going to control you. It's going to be what you think about, and eventually you're going to make that bad decision.
Right. Make sure you're getting positive feedback, positive reinforcements. Things that you're already buying, buy more of.
When does the House of Wall Street win?
When they're playing.
When you get sucked into the short-term game.
Oh, right. When you get sucked into the short-term game.
The whole House of Wall Street
Right.
is built on getting you to focus on today.
Right. And get in, get out, get in, get out. Stay in for the long haul.
So why don't you just sell here and buy back in at the bottom?
Because you don't know where the bottom is. You don't know where the bottom is.
You don't know where the bottom is?
I don't know where the bottom is.
But you watch the market every day. Can't you just figure it out?
No, you have no idea.
It's true. You don't have any
You don't
idea
have
where
any
that
idea.
bottom is. And so people who say, I'm going to sell here, I'm going to buy back in at the bottom.
Full of.
That's right. It just doesn't happen that
No,
way.
it doesn't. You can't time the market.
If you're going to be successful, you got to understand that if you're out of the market, that's the most dangerous thing you could be, even if you have a small amount of money. So how could that be? Because if you miss the 10 best trading days of the last 20 years, instead of having an 8.2% return, which means you double your money every 9 years, which is what most people did if they're in the index, the S&P 500, I'm talking in shorthand. But if you just miss the 10 top trading days in 20 years, your return's 4.5% cut in half. If you miss the top 20 days, you make 2%. You might as well have a bond. If you miss the top 30 days because you think you're trying to time the market, you think it's not a good time, then you lose money. In the same exact market. So you got to be in the market.
Okay, takeaway number 4 is, since most of our viewers have index funds, about half of you in all likelihood have an S&P 500 index fund.
It's one of our favorites.
Yeah, and so you have the 500.
America's top 500 companies driving your portfolio, and it's the best of the best.
So, but the market's down 1,000 points yesterday and 1,000 points today.
But you're still buying from Amazon. You're still getting Apple. You're still watching Netflix.
You still drink Coca-Cola?
Still drinking Coca-Cola, just no Corona.
You're renting Disney videos?
Disney Plus, just install that.
So your behavior typically doesn't
It's gonna
change
be
too
fine.
much.
No.
Yeah, during these short-term crashes, if you want to
Right.
call this a crash.
It's a little bit of a crash.
And it's scary. We're not saying it's not scary, but what you have to do is figure out a way to look at your 10 to 30-year horizon. And these events happen every year. So from a short-term perspective, things get kind of scary when you see the market pull back this sharply in just 2 days. And there's no end in sight for the potential damage of a viral outbreak. And so it's easy to get caught up in that. However, when you pull back to a long-term chart like this, I think it puts it all in perspective for you. So historically, the market goes up over time, and you have these dips, but the market goes up over time. So your friends who said, hey, I just shorted the market, and this is wonderful, and I just made a ton of money because the market was off 1,000 points.
Yeah.
Look,
Doesn't always happen that way.
they can get away with that occasionally, but in terms of the long term, good luck with that strategy because the market goes up over time.
Okay, so with the coronavirus, do you really think the stock market's going to go down to zero, Mike?
Well, I can tell you this, when you have a lot of your money in the market and you watch it go down and you're staring at it,
It's hard.
it does feel like it's going to go to zero.
Right.
I have to tell you.
And
so,
you just want to bail, just eject.
yeah, because then you don't sell today and then tomorrow it's down another 500 and you're like,
Oh, I should have
dang,
sold
I should have sold
yesterday."
yesterday. And so then, but by the time you finally do sell, in all likelihood, the market starts going up because that's when everyone else
Right.
has sold. And
Right.
whenever there's a sell, there's a buy, right? So what we traders like to say is sharp pullbacks like this shake out the dumb money, and the smart money is on the other end buying. But we don't know how far it'll go down. You have to be prepared for the market to go down for the next 6 to 12 months on this news.
Sure.
It's possible. It could happen. And that's why traders try to time the market. That is always going to be a draw, and it's very difficult to resist that temptation. And yes, you might think that portfolio is going to go to zero, but if you just historically look at what happened over the last 10 to 15 virus scares, what did the market do? And then if you want to go back further, take a look at the last 100 years. You got World War I, you got World War II, you have assassinations, you have all kinds of things that have worked into reasons why investors can get scared out of the market. In general, though, when you sell, in my experience, the market tends to, you pretty much top tick the bottom, or bottom tick the bottom.
You've locked in your losses.
And you've locked in your losses. Now, occasionally what will happen is you did sell at a smart time on a short-term basis, and the market continues to go down, and you go tell your friends, "Oh, but you're glad you're not in the market."
Sold out. But you don't buy at the bottom.
Yeah, you never.
You just go.
What happens
you
is
watch it go right back up past to where you sold.
we've had several crashes since then. The last 2 days, I don't know if they're going to call this, we're about to find out if this is a flash crash, which means if we pop right back up next week, they'll call this a flash crash of sorts. But if this ends up being a prolonged 6 to 12 month digestion, just remember that Amazon is
Here to stay.
is driving the performance of your portfolio, and these other giant companies that have great products, and people still have to eat, people still have to do all of these other things. So Todd, what do you got in that bug out bag?
Oh, the essentials. I got my flashlight, my water filter, my MREs.
Mask?
I've got a mask. I've got some playing cards.
Fishing pole?
Fishing pole. I've got some comics, some Tintin comics. I've got all kinds of things to just be ready.
All right.
To prepare.
All right. Well, I'm gonna stick with my S&P 500.
Low cost index fund.
Yep.
All right.
That's where I'm gonna be.
So
I'll see you on the other side.
all right, we'll do.
All right. I'm Mike.
I'm Todd. Thanks for watching.
Todd, what's wrong? What are you doing?
The coronavirus is here. It's the biggest third day, single day